Hey everyone, and welcome into the channel. My name is Brent. Today we're going to be covering the SoFi Investing Challenge Week 28, Tiny Deposits, Real Growth, Full Transparency. Now on Monday, markets opened up. Essentially it was kind of moving up higher, but we closed below the 50-day moving average with a lot of downwards pressure. So this was last week's. I'll go ahead and have a better screenshot here in just a few slides, but we're going to be taking a look at how the market is essentially kind of moving in a downwards position to the beginning of October-ish, right? So with that said, if you guys are brand new here, definitely go down below, subscribe, hit the thumbs up. If you guys have any questions, drop them down in the comment section, and also join the Discord server. It's completely free, and let's go ahead and get into it. So weekly performance snapshot over the last week from the 10th to the 14th of November 2025. We had our second red week in a row, right? It's been a lot of green, a lot of green. Essentially, we had so much green between May of 2025 and October of 2025. I remember there being only 2, maybe 3 red weeks in that whole monthly period, right? 3, 4 months of just solid nothing but green. And then now we're starting to have some turbulence, right? We had the second week in a row of red. We had the S&P 500 down 0.78%. The NASDAQ whopping 1.61% over the past 5 days. And then we had the Dow Jones. Dow Jones actually did really well up until about Wednesday, Thursday, and then kind of sold off only negative 0.02, right? So the market's slowly breathing down. The market can't always be inhaling and taking a deep breath. Sometimes the market has to exhale and just let a little bit of the gains go before it reestablishes some support, reestablishes that breathing motion, and then, takes another breath in and the market continues moving up. But we did have the government shutdowns. There was some initial relief early on in the week as the resolution of the government shutdown on Monday boosted some stocks. We saw all across the market. Market was pretty strong on Monday, Tuesday. As the week progressed, there was widespread concerns about the overstretched valuations of tech and AI, and that kind of led into that sell-off on Thursday and into Friday. Now, also, another thing that is also kind of hitting into the markets right now is that the markets really expected, upwards of 90% chance for a rate cut in December 10th. But that is fading quickly with the fading hopes that the Fed's actually going to be coming out and cutting the rate. So the market is kind of priced in. Where exactly are we going to be? Debt isn't going to be any cheaper. Spending a lot of this money and having debt right now, it's going to sustain where it's at. And also the big thing right here is a big rotation from tech companies into healthcare. We'll show that here in the next slide. So right now, there is a big rotation. I don't think the AI bubble is as big as a lot of people are claiming it to be. Back in 2000, when we had the dot-com bubble and the crazy valuations, that was built on nothing. There was nothing out there besides hype and dreams. Here we are in 2025. There's a lot of tech and AI that is getting higher valuations, but that is because of the infrastructure that they're putting in place these days. NVIDIA, Meta, Apple, these companies, there's tons of them out there, tons, but they're putting pieces in place. They're spending money up front because that's what it takes for this tech and AI boom. It needs to have money spent up front to get the infrastructure in place, right? In any sort of business, you have to roll out heavy amount of purchasing early on. If you're a company and you have everything relies on the network, right? So you got to go out there and purchase all the infrastructure, the gateways, the routers, the firewalls, the SIEM products, the switches. All these things need to be purchased up front, put in place, and then after these pieces are put in place, then you can begin to tinker with them and get that that golden standard on them before to optimize them. And then once you've optimized all these little pieces, then you can begin to look for efficiency, things that you can cut back on and improve on and make it more efficient. So right now, there's a lot of spending in infrastructure and AI really early on because it's in the infancy phase. So as we progress from here on out, a lot of what's already in place now will become less and less expensive, or it may become more and more expensive in the future. But I feel like it's kind of overblown in the short term, and that this is actually just a buying opportunity for a lot of investors out there who are just looking for a dip in the market. So, and our fear meter between the week prior was at 21. It actually went up by 1 on Friday, closed to 22. And then when I was taking a look at the stock futures, we were positive this morning, Monday, when the market opened. Everything was positive. The S&P, I checked out my portfolio. I was like, hey, wow, it's up. NASDAQ was up, Dow was up. And then about midday, around 11, I believe my time, I'm on the Pacific coast, everything started trending negative, negative, negative. I went ahead and just closed out of my portfolio and said, you know what? I'm not going to buy anything at the moment. I'm going to give it a little bit of time to, find wherever it's going to move to before I begin moving some capital into the markets a bit heavier than I have been. Right now, I've just been consistently dollar cost averaging, but I'm waiting for that opportune time. Now, here is the screenshot of last week and talking about the rotation from IT technology towards sectors of the healthcare, right? So last week, we saw Oracle, Amazon, Tesla, Google, Meta, Broadcom, all kind of negative, right? And what do you see that really pops green here in the chart? It's that healthcare sector. Eli Lilly, 10.92. Johnson & Johnson, 5.02. AbbVie, 6%. Merck, 7.7. And we have Pfizer, Guild, and many others, right? We also saw energy kind of being positive on the week. Exxon and Chevron, also pretty positive over there. So there's that sector rotation. Money's kind of just moving around and flowing. As long as you're invested in the S&P 500, yes, it's going to hurt. It's going to hurt short term due to the moving out of specific sectors, but that money is getting funneled into underperforming areas. And eventually, when those begin to perform well, the market in itself will kind of balance out. Your portfolio will kind of balance out long term. So if you guys are interested in starting your investment journey and haven't started yet, you guys can get started down below using any of the links. Let me know what is your preferred platform. Over at SoFi, you deposit $25. You guys can get $25 completely for free. If you start over on Public, you deposit $1,000. You get $100 for free. Robinhood, everyone's familiar. You deposit X amount of capital. You can get anywhere from $5 to $200 with Robinhood. And those are the three main platforms that I use myself or have used in the past. M1 Finance is out there as well, Moomoo and Webull. I don't use those as much at all anymore, but they're all available if you guys are interested in getting your very free investment tracker that I use to get my investments tracked up to $1,000 or beyond. There's a free tracker down in the description down below or in the pinned comment. And with that said, let's go into my progress update. This portfolio is over at SoFi Investment. Eventually, when I do get this portfolio to $1,000, I'm going to be moving it over to Robinhood, and we're going to be doing another challenge. I'm going to be trying to invest a different style. It's going to be more of a sort of kind of maybe potentially like a trading style. And we're going to be doing a couple trades per week, starting with an X amount of capital and seeing how we can either underperform or perform against the market. But our base investment last week moved up $25 with our deposit there of $25. Our weekly balance moved up from $841.10 to $864.24. I think I meant to write 24 here because, oh no, it probably was that. So current market value as of close on Friday was $864.24. So in reality, I did lose a little bit of capital last week. The portfolio was down right along with the market, down 0.79 because we invested in VU. The weekly change, I lost $10.26, not too bad. Our total return since we've been investing since May is nearly 7% in that portfolio, and our total change is $55.17. We purchased 0.04013 shares last week, bringing up our total share count to 1.4007 within this portfolio. And we are 40% of the way to owning 2 full shares of VU within the SoFi investment portfolio. So the whole point behind this investment challenge is to showcase that $25 goes a long way to building up your initial investment journey. Now, my son, he is 10, but he loves to kind of see the progression of how his capital would do. Right now, he doesn't have $25 every single week of his own money to deposit into his bank account or into his investment account over at Fidelity. But when he does have capital, which he does have roughly $350 invested right now, he's positive in VU, he's positive in Apple. He bought into Facebook last week sometime. I think that position is still in the negative, but he's able to kind of see how just starting a few months ago, the change in the market, the volatility, the opportunity for him to invest when the market is a bit red, buys back more shares, and then when it does recover, because when you're invested into specific companies that you believe in long term, they will eventually recover, turn a profit, and go green. So he's learning this early on, right? It doesn't have to be big money. It could be as little as $25, $10, or more per week. So that's kind of the point behind these. He likes to kind of showcase how $25 could have made him if he had that. So our investment tracker here, our progress towards our goal, 864.24. And we can see here that we're 86.72% of the way towards our goal. Over the last 3 or so weeks, right? The last 4 weeks, the progression slowed down quite a bit. Here, we were going from 3% gains to a 9% jump right here to 3%. Nothing, it kind of stalled out right here. 3%, 1, 4, 4, 3, 2, 2. So these last few weeks, the market's been kind of trending sideways. It's consolidating. It's either going to move up or it's going to move down. Or it could move down, find a bottom, like find some support, and then retest its levels and then kind of pop back up, which is probably what's going to happen. We just don't know where that support's going to be at. We don't know where it's going to fall to. So that's the progress towards our goal. So that is going to be it for today's video. Just a quick and easy little video. If you guys have any specific questions regarding SoFi, Public, Robinhood, or any other platform, drop them down in the comment section below. If you guys are investing into anything specific in the stock market, I'd love to hear from you guys. What are you guys investing in? What do you guys think about the talk of the AI bubble? Do you think it is something to be more scared of? Or do you think it's not such a negative thing out there in the market? So that is it for me. Thank you all for tuning in. I will catch you guys in the next one. Bye-bye.